about to do a deep dive into crypto. We'll start with Bitcoin. We've got John Glover, Chief Investment Officer of Ledden, joining us now for Insight. So let's talk about the state of Bitcoin right now. It's below 65,000. It hasn't seen its high in a little while. How would you kind of characterize the state of Bitcoin right now?
I'd say currently we're in a bit of a holding pattern, Diane. There's no real impetus that's going to drive Bitcoin prices higher in the short term. I think the next driver is going to be the approval of the Ethereum ETFs by the SEC, and that's going to drive more traditional finance investors into the asset class as a whole, and we should see that spark Bitcoin prices to rise as well, just the same way we saw ETH prices rise when the Bitcoin ETF was approved.
So we certainly saw a catalyst at the beginning of this year that sent Bitcoin off to the races. Is this kind of, it's a holding pattern right now, but is there the potential for Bitcoin to enter into any kind of correction territory?
I think we're seeing a little bit of a correction from the highs that we saw recently up at the 73,000 level. That correction could take us down to the mid 50s, like 56.5 K, I think. But ultimately, we're seeing a technical picture that looks very positive for Bitcoin. We're seeing more widespread adoption come in from the investment community in the retail sector in the US. So, it's a very small proportion of investors that actually hold crypto in their portfolios. Investment advisors are getting much more comfortable recommending it. So I think we're just at the front end of the adoption of Bitcoin. So while there could be a little bit of a correction further, I don't expect that it's going to dip down below the kind of mid 50,000 range.
Okay, so mid 50,000s if we see a correction. So Bernstein put out a note this week seeing a price target of 200,000 for Bitcoin. Their prediction is that will be 2025. Is that reasonable? I mean, Bitcoin hasn't even hit 100,000.
Yeah, I think it's a pretty aggressive target myself. Our target for Bitcoin is somewhere between 85,000 and 100,000 in this cycle. And then we'll see a correction. I think 2025 we'll see prices exceed 100,000. I think 200,000 is extremely aggressive, but look where it's come from. It's still a nascent asset class, so there is potential for this to go quite a bit higher. But I think 200,000 by the end of next year is pretty aggressive.
Right. You talk about the adoption level. It's not. It's gained more steam this year, especially with the ETFs, and then you have the Ether ETFs coming. Where do you see adoption going through the balance of the year? Does it start to gain more traction this year, or it's 2025? What your outlook is?
I think this year we're going to continue to see more adoption, widespread adoption, particularly in the U.S. Because it's kind of lagged behind other countries that have had spot ETFs as part of their offering for quite a long time, like Canada and Australia, et cetera. So we've seen adoption in those countries exceed the U.S. So I think that the U.S. has got a long way to go. And, just with the size of that marketplace, that's going to drive prices higher.
And then what levels are you watching when it comes to Ethereum? So,
yeah, Ethereum's right now at kind of 3,500, and it obviously lagged Bitcoin when Bitcoin ETFs were approved. So it's caught up a lot, but it's still got some more catch up to do. I think we could be looking at Ethereum price in the next kind of 18 months, because I think it's going to take some time for that to gain traction. But I think we'll look at an Ethereum price that's going to be in the 7,000 to 8,000 range.
If investors are looking for exposures to crypto and they still want some safety, is the better place to be the ETFs, the coming ETFs?
I think the ETFs are a very safe place to invest. I mean, it's got huge depth of market. It has a great futures market for the market makers to be able to hedge their exposures in. So, when I look at, would you go into the ETFs? Would you buy just spot Bitcoin? Then you've got to hold it. You got to control that in a wallet. So there's a little bit more administration that people have to put into that. Or would you buy some of the publicly traded Bitcoin companies, whether they're miners or not? To me, the cleanest exposure that you can get to the crypto market is through the Bitcoin and hopefully soon to come Ethereum ETFs.
Okay, and crypto's gotten more validation this year with the rise of these ETFs. Is there any final thoughts that you have on the state of crypto, especially when you think about there's still some criticism about the sector?
Yeah, I think the criticism about the sector is valid in some aspects when you think of how many cryptocurrencies have been created, and most of them really don't have a use case. But Bitcoin is still the dominant cryptocurrency, followed by Ethereum, and then maybe another three or so that really have valid use cases where there are businesses being built on those asset classes. The vast majority are very, very speculative. Many of them, in my opinion, won't be around for a very long time. So I understand the criticism in some aspects, but I think that once investors really understand what Bitcoin is and what the use case for Bitcoin is, what Ethereum is, and what that use case is, that the adoption will continue. But I would agree that unless you really want a speculative play, I'd stay away from the vast majority of the rest of the coins that are in the marketplace.
Very balanced perspective. Thank you so much, John Glover, Chief Investment Officer, Ledin. Thank you, John. Have a good weekend.